When you're shopping your mortgage, it might be a little intimidating to decide which lender to work with, how to decide that the offer that you have is the best offer. One of the things that helps in this regard is that all lenders are required to use the same form when we're disclosing a loan, as far as the rate, the terms, all of that. The majority of the fees that you will pay when you're buying or refinancing a home are going to be third-party fees. Attorney, insurance, taxes, things like that, and that's not lender specific. So I want to take just a few minutes and explain to you how to read an estimate so you can understand and compare lender to lender. So that standard form that we all have to use is called a loan estimate. And on that loan estimate, on the first page, there are going to be a couple important points to notice. First, is your interest rate locked? What is the interest rate? And also, what is the estimated payment, including, if appropriate, mortgage insurance, and how much is that mortgage insurance? You're going to look at the bottom of that first page, and it will tell you your total cash to close, meaning how much are your closing costs, and then also what is the total cost due at closing, including your closing costs. Beyond the mortgage insurance, which can vary a little bit lender to lender if you're getting a conventional loan, you're going to want to pay attention to two main sections of the loan estimate as it relates to the lender. The first is Section A. Section A is where you're going to see things like origination charges, underwriting fees, processing fees, commitment fees, and also discount points. A discount point lowers your interest rate, and all of that is going to be lender specific. Section B is going to deal with services you cannot shop for, and that's going to be things like the appraisal, if you are paying for your credit report, the flood certification that a lender has to pull, and some other sundry fees. Everything else that you see on the loan estimate, Section C, Section D, Section E, and so on, are going to be third-party fees, meaning whatever attorney you choose or title company that you choose, it's going to be the same regardless of the lender that you choose. Your property taxes are going to be what they're going to be. Your homeowner's insurance is going to be depending on the company that you choose. And the amounts that need to be set aside for your escrow account, for your reserves for taxes and insurance, are going to roughly be the same calculations lender to lender. The only other thing that you're going to want to pay attention to when you're evaluating lenders to lender is, are you getting a lender credit? Most of the time, a lender credit is generated by a slightly higher interest rate, and that is also going to be listed out. The other thing to keep in mind is if the rates are different from lender to lender, a lot of times a lower interest rate will carry higher closing costs, and a higher interest rate will typically have lower closing costs. So the best thing to do is to evaluate both the rate and the fees, or to ask the lenders to all quote based off of the same rate. And then that way you have an even playing field. My main goal is for you to be able to confidently make the right choice for your mortgage, understand what you're paying, and be able to feel empowered to ask the questions that you need to have clarity on what those things are going to look like going forward.